Okay, so we'll be doing something a bit very serious for today, and I would love you to pay. Give me a minute. So yeah, let's proceed. So today's topic we cover a bit of the basic market structure and the advanced market structure. So I don't really know how every other person trades, but I trade in a very unique and simple way, buckled up with confidence and trust. That's how I trade. So I don't know how every other person trades, but if I tell you this is what this is called, this is for me. You might go outside and he has another name there. It's not even my own business, okay? Because the way I learn and the way it was actually easy for me to understand, not even just about trading, the way I understand things in my own life as a human being, I learned by improvising, not like totally changing what I've been taught, but breaking it down to my own understanding. That is why if I teach you today and tomorrow you say you did not learn from me, even if you change your username or whatever, there'll be a particular word you pronounce and I will just know this person learned from me. Why? Because it is not the normal thing it is called. I gave it that particular name for my own understanding. It's not like a copyright or something, but I had to give it that name so I could remember it and understand it better. Okay, so why am I giving that disclaimer? Because in case I teach you something and maybe you know it before or whatever, and it's not the way it is called for any of those persons. I'm not about the language or whatever. I am about the money. So if you are more interested in what it is called than what it produces for you, it's left for you. So now, first of all, let me just do a quick brush up for the basic market structure because of that person that texted the moderator that he did not attend the first class before we proceed. So firstly, I would say that the basic market structure is the way people traded in the past, maybe, and the way people trade the higher time frame. Now, what do I mean by that? What I classify as the basic market structure is the way we illustrate the chart on a template. This is what I mean. Now, if somebody asks you, how does the market move? Oh, they tell you to draw it, okay? What everybody we do, including my younger brother, is this, that the market moves like this, which is correct. The market actually moves like this. Now, why do I say it is correct and why do I say it actually moves like this? It is because in which sense it's either it is going up or it is coming down or it is going nowhere. It's just like that. Okay. So the moment price goes up, comes down, does not go below the previous low, goes up again, takes out the previous high, does not go below the previous low, it's classified as the uptrend. Whatever happens in between before this thing happens is not our business. That's why it is called basic market structure, basic understanding. The basic understanding, the fastest way you can explain to somebody that the market moves is by telling them it goes up and down like this. But do not forget that in between this up and down, there are a lot of things that have happened here. A lot of things that have happened. Now, the best way to, like I say, classify this basic market structure is to put it in the higher time frame where it belongs. Why does it belong to the higher time frame? Because this is where you will see the market move like this. It's in the higher time frame that the market moves like this. In the lower time frame, the market does not move this way. Okay, let's get an example. I would have loved to use your, okay, this is synthetic class, so I have to use Excel 525. Okay, let's quickly check the 4 hours time frame. Okay, let's check the 4 hours time frame. Okay, so like I said here, I said for real, let's be realistic. The market moves the way I illustrated in the higher time frame. Why? Because we neglect, try the word neglect, okay? It's because we don't actually put in the other things that happened in between. The other thing that happened in between, I mean, is when something moves like this, you cannot tell me it just moved like this. Okay. Just like if you throw something up, okay, because your hands are not perfect, it has to shake a bit before going up and eventually to what come down. So that's what I mean. But then the basic market structure basically could be found in the, okay, this is perfect for the example. I wanted something easy to understand. And you know that yeah, I just like learning, so I need to give something easy. So yeah, you see how this thing is moving now. It's just moving just as I explained. You can neglect every other thing that has happened inside of it. So I broke this high. We have this. We are not even talking about everything that happened inside here. Then came here. Like that. So far so good. The last strong low we have here is this low. For the fact the market is in between this place, it will be classified as ranging. until what? Until it takes out either the high I'm talking about is this high or this low. It takes out the high, it gives us a new what? A new leg, which makes what? Display the new strong point, big high. But for now, the last strong point we have is here. We can never, yeah, it can never, I don't know, the market is dynamic, so let me not just say it can never. Okay, let me use the word for now. There is no such thing as strong high and strong low at the same time. It's either one is strong for the other to be weak, or the other is weak for the other to be strong. But there's no such thing as this is a strong high and this is also a strong low. In the previous class, I explained that it is this strong low that bets a weak high. So this point cannot be a weak high until it is taken out. The reason why it is even called weak, as the name implies, is because it was taken out. And for this to be a strong high, this movement that is currently happening here has to break below this low. And once that happens, this becomes a strong high and this low becomes a weak low. When the class goes on, I will explain how to properly identify an external and internal. For now, let's proceed. So, working with the previous video the other person must have explained before for the basic market structure, and this I have explained should give you more light in what we are doing. So moving forward, we'll be talking about does anybody have a question or something? Is there a question on this? Let me just take one or two. Just raise up your hand if you have a question. Okay, one person. Okay. Hello. I unmuted you, this person. Please don't be a distraction to this class. If you don't have a question, don't raise up your hand. You just waste our time. Joshua, I omitted you. These two people are not serious. I don't know why people don't just listen to simple instruction. Let's proceed. I thought they had a question. So yeah, we're talking about the advanced market structure. Now, in the basic market structure, there's a saying that price should not take out the last strong point. Why did they say that? It is because they believe, or should I say we, because I actually believe the same. We believe that if price take out this last point, then it is no longer expecting our explanation of what higher highs and higher lows, which is simply this. Okay, it now defaulted the whole rule, because if all of these are 4-hour time frame and all of these they are called externals, okay, and all of these are externals, they believe that price should not take out the most recent external. So looking at this structure, the most recent external in this one leg is this one, because price has not created another one. So if price takes out this guy with the body of the candle, okay, it is classified as a change of character. Now, what is a change of character? A change of character is simply price changing trend in the higher time frame from an uptrend to a downtrend. From an uptrend to a downtrend. When it has to do with basic market structure, it deals with the higher time frame, and these are externals. These are major strong points. You don't joke with a 4 hour time frame, because that's where you get where the trend is coming from, where it is going, and all of that. From the higher time frame, it gives the original storyline. I don't take anybody that neglects higher time frame serious. I just see you as an inconsistent trader that is only profitable once in a blue moon. That's how. Whether you have to hide it or whatever. When I hear somebody say that I can be on the lower time frame without going to the higher time frame and I get everything correctly, I don't take you serious. From that time, if I was listening to you, I would stop. I don't take you serious, because how do you know the previous movements of the market, and how do you know where the market is going? One thing you should note is that the higher time frame gives you the overall edge to the market. What do I mean by edge? I'm trying to say that it gives you an insight of what has happened before, what is going to happen, and what is currently happening. Okay, what is currently happening. Now, the higher time frame can be bearish and the lower time frame can be bullish, but the higher time frame has, I wouldn't say the final say, but it has strong probability to decide what will happen at the end than the lower time frame. So it should not be overlooked. Okay. Now, that being said, if price takes out the most recent external in the higher time frame, it is called CHOCH. I don't know how I pronounce it. Choch, whatever. CHOCH. Change of character. Change of character. Change of character. Taking out the most recent external. All right, let's proceed. Now, it's different in the lower time frame. In the lower time frame, you cannot tell me that. Okay, let me just give an example. Let's say we have this higher time frame, and as I said before, why we call this basic market structure, we are neglecting everything that's happening inside. But now let me bring back those things that are happening inside to your notice. Let me just maintain the high and low basic structure inside still. But definitely it doesn't move straight like this. It doesn't at all. I cannot even lie to you. It doesn't move like this inside. But let me just do it like this so that you understand what I am doing first before I proceed. So yeah, this way, it is the most recent. Now, when it comes to the internal, which is simply the minor structures that are found inside this basic market structure external, these other ones that are inside here, they are called the minor structure. It's the major structure, which is your basic market structure, the minor structure, which is simply called an internal. I call this external. These are internals. Okay. Now, for the internals, unlike the external where we don't want to see this, if not, it's just like a breach of contract. He just failed us. Why? So, unlike this guy here, once one is gone, we have to start shorting or get your entry. Not really just immediately, you have to get an entry. For the internals, what do we want to see? Let me just keep this here so that it's actually disturbing me. Just assume that this guy is on top here, Jerry. Now, for the internals, we do not want to see two of these guys taken out. The most recent, and Shai is the word second in command. Okay, let me just say second in command for now till we get to other flow. Then I will tell you what it is called. We don't want to see the first in command and second in command taken out. As a matter of fact, the first in command can be taken out, but the second guy should not be taken out. Why do I say the first guy can be taken out? Because if the first guy is taken out, price can buy immediately and continue. That's why I told you that it doesn't move like this I illustrated here. Because once this happens, it is no more this thing that is moving like this again. Straight, straight, straight. There is now 84th. Something like a change of character and higher time frame has already occurred and then it's still bought. So it doesn't move like this. It doesn't move like this. It can, as a matter of fact, let me just be very, very honest with you. It can take out these two guys, but there is a process which this one is done, this particular one. When you get to entry, you understand this one I want to see now. You can take out these two guys and still buy. You know, sometimes you guys would say, it got to my entry, it took me out, and then it started buying. The reason why you could not tag along is because you do not know what next to do. And it is those things you were supposed to do. Those are the things I am here to teach you so that the next time you see it, you just say that, oh, I'm familiar with this thing, Joe. So you just know what to do immediately. Okay. So, but let me just put it in a simple way you will understand. It doesn't have to take out these two guys. If it takes out the two guys, it is bridging the contracts again. Now, people have different entry model. I can say that when I say the most popular, I don't know, but on Twitter, FXNG, maybe is there like synthetic NG, maybe synthetic NG, crypto NG, city NG, any NG at all in Web3 that deals with analysis, trading, and the rest. Once they see everybody just like this thing here, everybody sweep. Did he sweep? He did not sweep. Now, if you remember what I said before, I talked about when something becomes available, it loses its original value. It will work, but the rate at which it will work consistently drops immediately. Sometimes ago, this was the talk of the town. Everybody, if you're not trading this, feels like you don't know TA. Okay, and as a matter of fact, this was what they used to classify the advanced market structure. They call it the sweep, Baker structure 1, retracement, and Baker structure 2. And that is what they call the rules of the advanced market structure. But this thing you see here is simply an entry model. Advanced market structure is this thing I told you here now. This one you see now is an entry model. Some call it QMR, Quasimodo reversal. Some call it QML. I don't know. Quasimodo level. Some people call it sweep and inducement model. Like everybody and their own name. Some self name it after people. But the truth of the matter is that this is just an entry model, like every other entry model you know. It works. Okay, it works. It does work. But it is just an entry model. The whole advanced market structure thing is two internals making one internal. Two internal making one internal. These two guys are one. Just like all of these are internals. But in reality, it's called 2 to 1. Two guys make one. We are all family. 1, 2, the same mother and father. 1, 2, the same mother and father. But once the first family dies off, the other guys have little or no life left, except something else happens. Is that something else? We'll find out as the class goes on. I don't like teaching for a very long time because I want you to understand, and the topics are not very much. I told you I trade in a very unique way. Simple, something really simplified to even a little child's understanding. Okay. And I try to use things around you to do example. That's why I said mother and father here, family, so that you will remember. With that being said, let's quickly just use these two guys here to check how the internal look like. For now, if you don't know how to properly identify an external and internal, just calm down. Learn this one I have to do now. It's actually a subtopic inside one of the topics I gave out to tech, where you will understand how to properly identify them. You might be wondering, how did I know that this is an external, this is a high or whatever? There is a procedure to identify them. Once you just learn it 1, 2 times and memorize it, when you see it, you will just know. Just as I saw it and I knew. So now, let's check out the internals. We use 1 hour, 30 minutes, which one? Okay. And there's what we call time frame correlation. Most of you actually just use any time frame, any time frame. No, it's good to like know time frames that actually work together. Okay. Now let me shock you guys here. And most of you that already know how to analyze before, should I shock you to tell you that you might be thinking this thing here is an inducement, but it is not. I don't know if you have learned before, this thing here is not an inducement. It is just a normal structural liquidity. The inducement and where this thing actually bought from is this guy, which means that what this guy is inside this guy, everything that one. This is where it bought from. I told you guys something about you can take it out and still buy. If I was the one entering this, it took it out like this, I won't even stress myself. I will just like put my entry here. This will be my entry. This the place it took it out is the place that will be my entry. Whether there is liquidity or no liquidity. This particular model does not even need. I think I'm going too far. This is about entry. It's too far. There are a lot of newbies here, so I think I should just take it slowly. So first of all, when you get your external, you have to those break or structure found inside this guy here is a break or structure that is found inside that one leg external I drew. I don't know. I removed the part two from there, the line. This is also one of them. This as well. I don't know. I'm trying to remember a particular song I used to relate to what I want to say now. Did I just give it templates for it? Okay, there's this song. Forgotten. I usually use it to explain this particular one. And when you remember this song, you just know. Uh, I've forgotten. But what I wanted to explain is to get internal, we are actually supposed to see to make it valid. That is why I did not choose this guy as an internal, and that is why market did not respect this guy. Okay, now market respected this guy to this point. This is what I want to tell you. 1, 2, 3, but came back. Whether it is small candle, once a POI price goes below it, whether it's with the wick or with the body, anything like this, little or no reaction. Once price goes below a point of interest, it is called failed. Once it closes with, most especially with the body of the candle, with the wick, that POI will still hold. With the body, the POI will hold with the entry model I will teach you. But once that entry model fails, that POI will not hold again. There is nothing. The market is dynamic. I'm trying to watch my words. Maybe there is something that will make it later buy, but for now, with my little experience, the probability of it still buying there is very low. But you see this trade here. If you trade very well, then you should be able to catch this. Even if this thing happened like this candle came like this, to even to this point here, even if it came to this point and it tapped on this, I told you that these people here, just like I and my father are one, like this guy and this guy, all of them are in the same family. Two big structure makes one movement in the advanced market structure. So even if you tap on this guy, you don't even need to wait at this guy. Like you don't need to. If this guy is a qualification or something you see in this point that makes the probability high for it to hold directly from this place. So if you don't want to risk it here, and this guy is close to this POI and it takes out this POI and you see that it tap here. Let's say you are late to enter. You don't need to stress. There's a way you can still enter from the same place that failed before. That's by the way. So I want to stop here. Is there any question? Just few questions before we go. Evil X. That's your name. Star Plus Billionaire Steven Emmanuel. Okay, let's start from. Please don't waste our time. Go straight to the point. Don't introduce yourself. Go straight to the point. Only ask questions pertaining what we just learned, and don't waste our time. If you don't have a question, don't raise up your hands. If you have a question, raise up your hands that you want to speak, and I will omit you immediately. We have just 10 to 15 minutes for this. Thank you. So, we have a white woman in our midst. Wow. So, any question, just raise up your hands and I will omit you. I'm not seeing any hands up. Not seeing any hands up. Okay. Best. Okay. Best. Go on. I have omitted you. Hello, are you there? I prefer the questions you will have tomorrow should be asked. The questions you like to type and come to my DM or something, just ask them here. So that when people are watching the video, you just save their time to ask that question and just like listen to it from the video. Okay, Best, let me hear you.
Yeah, good evening.
Yeah.
So Tech said that there were some recorded videos that you were gonna give us. I wanted to ask if you're still gonna like give it to us.
Recorded video. On what?
Like it's on the timetable.
Timetable. I'm doing a live class for everything. What do you need the recorded video for?
No, I don't know. Like probably like past. I don't know.
I don't. It's not necessary. I'm going to teach it now.
Okay.
Yeah,
All right.
that's
Thank
fine.
you.
Any other person, equation, suggestion, contribution? No, contribution. Okay. Question. Okay, Danny, Asa, please.
Good evening. I want to ask concerning the minor structures. Are
Okay,
those minor structures, like those highs and lows on the minor structures, are they what we call those internal range liquidity?
internal liquidity. Yes. But they will be called. We have not gotten to that yet. But let me just do something. See, look at what I want to show you now. If we have all of these, they'll assume that these are internals. Okay. Now, when they will be called internal liquidity is when these two family members fail to protect them, then the other ones will not be tradable anymore. They become internal. That's when you add that word liquidity, because liquidity is money that moves the market, and for this money to move the market, price needs to take them out forcefully or knowingly, anyhow at all. It is what move. That's why they say if you don't spot the liquidity, you will become the liquidity. You become the food for others to eat. So they are not yet called internal liquidity. They should be called just internals until the two family members that are supposed to protect them fails to hold. Okay, when they fail to hold, then all of this now turns to internal liquidity. Danny, is that clear?
It's very clear. Thank you.
You're welcome. Any other question? Okay, Joseph is up. Ade, I'll come to you. Joseph, let me hear you, please.
Good evening. Can you hear me?
Yeah, we audible. Thank you.
Okay. You said something about price breaking two levels before we know the rest are liquidities, right? So
Are you
normally
using
we learn when we
are
learn
you using a headset, an AirPod, anything at all like that?
yeah,
Kindly disconnect and speak fluently. Thank you.
Can you hear me now?
Yeah, it's better. Thank you. Go on.
Okay, my question is, when price breaks, what I found about market failure was one price break structure, like a shift in market structure, and
Okay.
we need to wait for a second break before we know price has actually changed direction. So, are you saying now that if price breaks the first leg and breaks the second leg, we
Okay.
will not need to wait for any break of structure again? Then we know that price has already changed structure already. That's my question.
Okay. Now let me explain something to you. Now when price takes out this first guy and this second guy, there's what we call last point of true mitigation. That is like the final trial to buy from a particular point of interest before you finally give up that it is not going to buy anymore. Now, the last point can be after it has taken out this guy. We know that it might buy, but not really so much. Let me use VIX 100. I think something like that happened. Like that happened. Okay, like VIX 100 now. If I should tell you that, hold up, let it slow. If I should tell you that this was a break of structure, like what I mean, this guy here, that this is how this thing is, you might not believe. Now, after this guy got taken out here, somebody has already hit SL trying to buy from here. No matter how you, whether this should be the person's entry here, uh, here, it should be the person's entry. You're being honest with yourself. Except if that person is a liar, this SL is gone. Except you are a liar, this SL is gone. Cannot tell me that you is below this thing that is already as wide as what will I even use? This SL is gone. Now it's not it has given us it has taken out the two family members, just so you know. At that point, it has taken out the two family members. Oh, it has taken it out, but I still bought from this point. That's that last point of trial. I still bought, and the buy did over a 10K proper profit from here. Whether you put your SL here, put it here, the truth of it is that you made something really significant. Okay, this is the last point of trial. You can see that after this thing happened, it destroyed this POI without mercy. Why? Because that was the last point of true mitigation. When we get to entry, you will understand better. But I explain it a bit to your understanding, even if not just everything, because that's far ahead. Joseph, you there?
Yes, thank you. Yes, thank you.
Billionaire, okay? Let me hear you. Billionaire, are you there?
Yeah, thank you so much. Please, I want to ask if price actually let me say, price break a structure, maybe on retracement of POI, then price now take out that particular zone, that is the last low with a body, despite our broken structure, does this still make that particular structure valid?
But that's what I just explained now. Did you see not take this thing out with the body? That's what I just explained now. I say be listening to other people's question because their question is your question. We are all human beings and our brain moves almost the same. It's just that it's quite, would I say, fortunate that some people understand things very fast than the other. I just explained this thing for the previous person that just asked before you asked. I say that it can take it out and the true the last point of true mitigation is the last trial of that particular point of interest. Please, some other person, do you have a question? Steven, go on. ASAP. This will be the last.
Good evening.
Yeah, good evening, Steven.
Good evening. Can you hear me?
Loud and clear, proceed.
Okay. I heard once upon a time, I thought that was on Twitter. I heard they said when price when a leg doesn't have an inducement, the price comes back to use that to use maybe the POI, buy POI or sell POI on that leg as the inducement, then continues price back in the direction. So my question now
Exactly.
is when that you said that the last high should not be taken, the last standing high should not be taken. So in a
Standing
case
high.
scenario when such a thing happens, do you understand?
Which high are you calling standing high? This thing is it this thing you are calling standing high?
Sorry, I can't hear.
What exactly are you calling standing high?
Uh, Sorry, come again, please.
What exactly are you calling a standing high?
No, I don't say standing. Well, let's say the market is in an uptrend.
Okay.
I once came
This
across
your
some.
structure, in short, let me just tell you, the first break of structure is called an inducement. Why I did not wanted to say is because it is called inducement liquidity. It is part of the three major types of liquidity, and it's almost pointless explaining it now when I will not explain the two other brothers. That's why I did not say it. Can you please keep Twitter people out of our class? Thank you.
Okay, thank you.
You're welcome. One more person before 10 p.m. Okay. In the absence of none, we have to not even precious tech just okay, we have to stop here for today and have a lovely new week, profitable, and please endeavor to watch this video 3 times before the next class. Take care of yourself and good day or night to you.